The
Right.
only way to get an investor interested, or if they reach a state of FOMO, fear of missing out, is
Mhm.
only and only when you have achieved your product market fit.
Welcome to VC Unfiltered by Fintech Ki Baat. This is a segment in which we bring India's top VCs to you and ask questions that you, the founders, have been longing to ask them. In today's episode, we have with us Mr. Shashank Randev, founder of 100x VC, India's one of the leading early stage VCs. Hey Shashank, thank you so much for joining us today. It's a pleasure having you here, and thank you so much for your time on the weekend.
Thanks, Shreyas. Always a pleasure to speak with you and be here. And all these things get done on Saturdays, so I'm super excited to be spending Saturdays like this.
Bilkul, bilkul. Thank you once again. Having said that, let's start off by understanding who Sashank is. Let's talk a bit about yourself, a bit of your background, and what got you into the VC industry.
Sure. I mean, so I am an education. By education, I am an engineer, electronics and telecommunication engineer. I did my
Hmm.
engineering in 2003, and since then I've had a very
Okay.
non-linear kind of a career path. I joined
Hmm.
a polyfilms company in Bombay. Moved on to moved on to Zensar Technologies in Pune. Then moved to Delhi,
Hmm.
worked with NIT Limited, uh, went ahead
Oh.
and did my MBA from IMI New Delhi. And post MBA,
Hmm.
I wanted to come back to Bombay and happened to stumble upon this opportunity where I um, you know I became the founding member for a startup called VC Circle, which was a media tech research
Oh.
company, and I
Okay.
built out their SaaS platform. And I think that was my foray into this
Hmm.
industry in 2009, where I spent a lot of time,
I see.
working, providing a SaaS platform for the venture capital and private equity funds. And we were very
Hmm.
fortunate to see the outcome of that entire startup journey. It was a 0 to 1 and then 1 to 100 kind of a journey um, in the VC industry. And the company got acquired. We got acquired by News Corporation in
Oh,
2015,
nice.
and worked with its new entity in for a year. And post 2016 is when I
Hmm.
decided to move on. And because I'd spent so much time doing this, I obviously wanted to move into direct investments. Tried my
Hmm.
hand
Makes
in terms
sense.
of applying to a couple of uh, funds, and stumbled upon an opportunity for an accelerator based out of San Jose. They were setting up shop in India. Did 70
Wow.
incubated 70 companies with them. Invested in 16 very
Hmm.
small ticket size, 20K, and that was my understanding into where India was moving into global comparison with Silicon Valley. Uh, I moved out in
Makes sense.
2018, did my first
Hmm.
angel investment, which happens to be a fintech company, and I'm now getting an exit out of it,
Oh.
hopefully
Oh.
next month. And then obviously
Amazing.
wanted to start a fund, and bumped into Sanjay, who's been a mentor and an acquaintance since VC Circle days. He had the same vision, and that's how
Hmm.
100x started, and here we are.
Awesome, like super interesting journey, and like, as you rightly pointed out, non-linear career graphs that you also have. Like I've seen many individuals, and I've always seen an exponential growth in understanding of the ecosystem, as well as the unique perspective that that brings to you as an individual when you kind of have worked in multiple industries across multiple domains. And looking at it from a VC perspective, I think it's really important to kind of have that kind of an exposure to look at specific ideas that the founders bring in from a multiple perspectives, kind of to evaluate it more holistically. Having said that, kind of let's move on and talk a bit about what 100x VC is and kind of what does it represent. So over to you. What's the kind of the founding story of 100x VC? I think you and Mr. Sanjay Mehta kind of started it together. So how does it go from there?
Sure. Yeah. As I mentioned, I was wanting to kind of,
Hmm.
set up a discovery fund, and Sanjay also had the same vision. And we have two other partners, Ninad and Yagnesh. Um, and we had reached in 2019 or late 2018. From my vantage point, I had realized that uh, India required a discovery fund where you were able to kind of give money to very early stage companies without valuing them, right?
Hmm.
And ease of deployment of capital. I think these were the two challenges. And if you could do this at an institutional level and give them capital
Right.
so that they can move from their 0 to 1, or in sometimes -1 to 0 journey also, uh,
True.
which is not being covered at the incubation level, right? Is what the objective was. We'd seen YC,
Hmm.
Y Combinator do this. We wanted to contextualize and Indianize it from an India standpoint. There were many funds coming up. There were many growth stage funds which were doing smaller check size, but somewhere at the bottom of the pyramid, there was still this first check which was as small as 35K USD. Now we've increased it to 160, but that
Right.
had uh, that had an opportunity, and I think that's how we kind of conceptualized 100x, where the objective was to invest in 100 companies a year. Um, Today, after 4.5 years,
Hmm.
we're at 150 plus. So we've not done 100. But the objective was identify a set of companies, give them capital through iSafe, which we introduced, which is India's simple agreement for future equity, which essentially enabled founders to
Hmm.
raise capital within 24 hours to a week's time
Hmm.
without diluting equity,
Right.
and raise money from an institution to build out what they've set out to build, right? And 100x will step in,
Wow.
kind of enable that, and then take them to the next level, where we become the de facto discovery fund for follow-on investors, and thereby increasing the
Hmm.
chance of companies from seed to Series A. So cut to today, 2023. What have we done? We've done 150 plus investments, 80 investments with a ticket size of 35K USD, which is roughly around 25 lakhs. We revised the check size to 160K USD, which is 1.25 CR. We've done 70, 75 plus companies in that.
Hmm.
And we intend to deploy 6.5 million in 35 odd companies in the next 6 months. And the companies which we've
Hmm.
invested in, 10% of those companies have gone ahead and raised up to 70 million after a funding cumulatively. Sorry, not
Wow.
10%. All of them have raised cumulatively 70 million, and 10% of those have now gone to Series A, which is a function of 5 million to 25 million. And 5% of those
Right.
are now moving to Series B. So that was the objective. Can you identify these early gems and money, product market
Hmm.
fit, whatever it takes to get them fundable and help them reach the Series B, Series C kind of a journey. Yeah, and that's
Makes
where we are.
sense.
And we are very sector agnostic. We've done a bunch of investments in deep tech, D2C, and fintech obviously has been at the forefront since class 01 and continues
Hmm.
to be a very interesting opportunity space and sector for us.
Amazing. That sounds super interesting, and so many questions, but I'll prioritize two of them, right? First one is, since you have also seen the parallel ecosystem growing in US, the San Jose vantage point that you had earlier, how do you see, or how have you seen that ecosystem vis-a-vis Indian ecosystem? How do you see the both the startup ecosystems growing, and do you see any similarities or do you see any differences in the way these in the trajectories of these two specific ecosystems growing?
I think India is at a very, very interesting vantage point, has been for the last, I think, 8 years now, 8 to 9 years.
Hmm.
In fact, has been since the time I started, we were at VC Circle, right, in 2009. Um, Silicon Valley is a great place for innovation and seeing a lot of solutions, and the drive to kind of, build out continuously innovative solutions. That
Hmm.
mindset was not there in India for quite some time. It was there in couple of
True.
founders here and there. Over the last 7 years, it's just become amazing in terms of the output. So we are seeing more companies come out. We're seeing more companies which are scaling. We're seeing second-time entrepreneurs building out. Uh,
Mm-hmm.
Particularly to the fintech drive, since fintech is the theme. The fintech
Mm-hmm.
adoption rate globally has been 87%. Sorry,
Right.
India has the highest fintech adoption, which is around the globe, which is 87%, compared to the global
Mm-hmm.
average, which is roughly around 64-65%. Right?
Oh, I see.
Major themes which have picked up have been around payments, digital lending, insurance tech, wealth tech, right? And
True.
we still remain one of the largest market, particularly in fintech. We are essentially the second largest
Mm-hmm.
market in insurance tech, right? So when you
Right.
compare Silicon Valley, San Jose in India, I think uh,
Uh-huh.
if I had to do a comparison, 2015, we were still very aspirational to what Silicon Valley is doing. Today, I'm very confident to say I think a lot of entrepreneurs, investors would be envious and looking up to the opportunities emerging out of India. Right? That's the shift which has happened, which, in my
True.
view, I think is a great point to be at in 2023.
Definitely, definitely. And I think there has been an increasing trend of folks or Indians who essentially were in US in the last decade now moving back to India to build out fintech startups over here. I've seen increasingly the number of founders who are returning from states and other countries to kind of build a company or a business over here. So
Correct.
that's also a good sign. This brings me to my second question. Uh, you spoke about iSafeNotes, right? This essentially also addresses the question that I was going to ask you about. How do you essentially evaluate early stage startups? But when I read about iSafeNotes, it kind of completely uh, eliminates the need of evaluating an early stage startups or essentially putting a financial valuation to it, right? You are essentially investing in the future equity. So that's a really interesting as well as a very useful tool for VCs to invest in early stage founders. So how do you like over to you? Like, would love to understand a bit more about that.
Sure. See, so iSafe is very similar to the safe instrument which was introduced by Y Combinator. From an India
Hmm.
standpoint, as per the Indian law, we've utilized this and condensed this into a tiny, smaller version of compulsory convertible preference
Right.
share. Now, what happens with this instrument is that if you're building it, you still need to evaluate the company in terms of the
Hmm.
opportunity and all of those nuances. What you move out is the valuation and the burden of valuing yourself from a founder's perspective, because you shouldn't be valuing your
Right.
company when you just build a prototype. Right? Your primary objective needs to be
True.
how to achieve product market fit and push out the product so that you can achieve scale. Those are the priorities which a founder needs to be focused on. What we realize is that founders
True.
very early on were just getting into no, मेरा वैल्यूएशन इतना है या मेरा वैल्यूएशन इतना होना चाहिए या आप बताइए कितना वैल्यूएशन है वो these were futile conversations to have been. They should have been addressing founders pedigree, market
Hmm.
opportunity, their ability to capture all of those nuances, right? So from
Right.
an evaluation perspective, we look at bunch of things. So one is founders pedigree, total market size, business model, and if they have a moat, right? And moat means if it's a blue ocean, if it's not a blue ocean within a particular domain, can they be a category leader? The question is,
Right.
how soon can they become a category leader? Because the business is all about investing in outliers. Now, iSafe,
Right.
with the help of iSafe, what happens is that while I'm evaluating these companies on these parameters, and if I like something and the founders also want to raise from us, that transaction can get closed within 15 days, 0 to 15 days, money into the account,
Wow.
right? Money into the account. Now, a
Wow.
typical
That's super
SHA
quick.
takes 60 to 90 days, right? And which is fair because at a higher
True. True.
uh, round, at a Series A round, you have to do a SHA round. There, an ISIF should not work, should not be applicable because you need to inherently value the company.
Hmm.
So, ISIF essentially
Exactly.
was again coming back to a thesis that can we be the first check? Can we give the risk capital to early stage founders who are essentially saying,
Hmm.
just building the product, and we come on board and help them, let's say, with banking partnerships, right? help them implement the product so that the
Right.
stickiness of the product is achieved. So that's how iSafe was introduced, keeping in mind the flexibility and the ability for founders to raise capital soon from 100x. Our
Mm-hmm.
ability to deploy capital and then move on to the next stage, right? Paperwork should not be, you should not spend too much time on the paperwork in the early days and focus only and only on the product. And that's why iSafe was very clear in terms of that we wanted to use this instrument in accordance to the Indian laws, and just make it into an instrument which
Mm-hmm.
can be utilized by other people also. So we made it open source. It's available on our website.
Makes
If you're
sense.
not raising from 100x, please utilize this to raise rounds from your friends and family.
Makes sense. So this is I think really helpful. Thank you for kind of explaining it in so much detail, and I think it's a really good instrument that enables easy evaluation. I wouldn't call it evaluation, but easy deployment of funds into early stage startups and kind of reduces the time as well. Uh, Having said that, since 100x VC is really a predominantly early stage fund, you might have seen a lot of founders, evaluated a lot of founders, and you would have seen them make a lot of mistakes. So, as per you, what are the three things that an early stage founder should keep in mind while they are pitching to their first VC or pitching to raise their first round?
There are a bunch of things. I think it's all about objectivity and discipline. Let's begin with that mind. So
Hmm.
if you're starting a business, you think, चलो start करते हैं business, VC से भी पैसा उठा लेते हैं, क्या 9 to 5 जॉब करूंगा मैं, is the wrong mindset. And we've seen a lot of these founders do this, right? So for instance,
True.
they'll start on the sides, they won't be full time, and they'll say आप हमें
Hmm.
पैसा दो, हम प्रोडक्ट बनाएंगे, फिर मैं फुल टाइम आऊंगा, और फिर मेरी सैलरी एट पार होनी चाहिए, तो जो मैं फंड रेज कर रहा हूँ वो उसमें से
Oh,
25% मेरा सैलरी. दैट माइंडसेट इज अ पुट ऑफ, right? Because that is
true.
like, you want to get away from your boss, so you're starting something and somebody pays for it, right? You'll be surprised, a lot of
Right.
founders sometimes do this. That's unknown, right? So you look at conviction of the founder. They mortgage their house, they're saying, boss, I've done this, now I need your help. This, you see hard conviction, full
Hmm.
time involved, building out, put in their own money. I think that
True.
is something one should be at when they're pitching to an investor. The second is, really, really diving down into the problem, or identifying a problem which could turn out to be big, and you have already created a solution. So again, how can you be a
True.
category leader and your ability to be an
Hmm.
outlier? Because if you're just another model, remember VCs want to also make outlier returns, right? So they will back the next
Agree.
Swiggy, they'll back the next
True.
Paytm,
True.
right? The objective is next बड़ा चीज क्या होने वाला है. And if
Exactly.
you're, as a founder, if you're able to kind of figure out the next big thing, so the onus lies on the founder to enchant the VC, so to speak, right? Ki, boss, you are
Hmm.
going to miss out. This is the larger opportunity. I think that vision is the most important one. Third is a when you're doing all these things. Third is to understand your product journey. Either, and sometimes this happens when you start as a product, and
Hmm.
there are choices you need to make, and suddenly there's a crossroad point you'll reach where either you could
Right.
become a services model or a product. For instance,
True.
you're getting one large customer paying you 100 rupees, and then you've got 10 customers paying you 5 rupees, right? Uh,
Hmm.
so your objective should not be getting the large customer, because pricing will come and your revenues will come. The
Exactly.
objective when you're pitching to VC, the third point, is the
True.
stickiness of your product. So if 10 customers or more customers are using it, that's a good indication upon the
Right.
first 2 points for the VC. I think these are the three things which we'll they should be doing before
Hmm.
they reach out to a VC.
Makes sense. Perfect. I think that puts a lot of clarity for the founders out there. I can't recollect how many times I've gotten these questions कि मेरा कल पहला pitch है, I'm going to pitch to my first few investors. I've meetings lined up हो गए, लेकिन अभी क्या बोलना चाहिए, क्या नहीं बोलना चाहिए, what mindset should they be in, is something that's always always kind of very confusing. So I think this is really going to put a lot of insight into that.
I'll take
Having
a
said that,
step.
I think
I'll
this,
I'll I'll
yeah, yeah.
mention one more thing. It's like marriage. It's
Hmm,
like you're getting married
true,
in an arranged, so you'll have to break up with your ex-girlfriend, or you get married to that girlfriend,
bilkul,
make it into. But you can't have like I'll have a job, I'll have my ex-girlfriend, and it doesn't work. So that's the
true,
kind of
true.
conviction which startup needs to have, and it's sometimes more than a marriage, right? That's the kind of there'll be low points, there'll be isolation, there'll be loneliness, and then you'll be like, somebody will post a post on motivation. You're like, what the hell, यार यहाँ पे उठा नहीं जा रहा सुबह और आप motivation की बात कर रहे हो. It has to be internal drive, right? So
Bilkul.
it is so internal that
Hmm,
that investors read into that personality first. And if they click with that, everything will get answered, right? So don't work so
true,
hard to answer VC's क्वेश्चन. क्या पूछेंगे? अगर कन्विक्शन आपका है तो आपको कोई
hmm,
रोक नहीं सकता फंडिंग से. सिंपल एज दैट.
bilkul, bilkul. Makes sense. Also, one thing that came to my mind. One is ki, I mean, since you have interacted with so many founders, right? What has been one thing that stood out to you that a founder did that made you say कि यार नहीं ये कर लेगा इसको इसमें इन्वेस्ट करना चाहिए. Like what was that trait or what was that moment?
I think great founders are very very thorough on execution, right? They know exactly what they want, right? And before you're able to ask questions, they've kind of answered two questions. I think that kind of a trait
Hmm.
is a strong indicator of a great founder. And we've seen a bunch of these guys come in who've pitched to us, we've backed them, and everybody had this one trait, right? They were super passionate about their uh, product line and what they're building. Second, they weren't
Hmm.
madly in love with the product. They were madly in love in building a business out of that product. And that clarity in terms
Right.
of boss, मैं A to B पहुंचा हूँ, B to C में आपका साथ चाहिए, C to D में ऐसा करना होगा मेरे को. That clarity, right, is
Hmm.
amazing. And we've seen this in these alpha entrepreneurs, right, who are very very clear in what they want, what they're building out, and they're
True.
also very very open. कि boss, I will be wrong sometimes. If the product requires a change for the customer, I will do that. क्या चाहिए customer को? क्योंकि eventually you're serving the customer, right? I think those self
Makes sense.
starters who have an understanding of that this is not going to be uh, a regular flywheel. You'll have to
Hmm.
continuously move, and we don't know what it will turn out to be. I think that kind of mindset when you
True.
see in the founder, then you're kind of sure that fine, कल को कुछ भी हो जाएगा, he'll get up, he'll do restart, and we guys are there. Plus, he has the domain knowledge, that maturity. I think we are seeing. And surprising, I'll tell you, Shreyas, the interesting point in India is you
Hmm.
asked me a question about San Jose. I'm surprisingly
Right.
seeing that mindset in first time founders fresh out of college also. They're also no longer stupid.
Wow.
You know, they're not saying, "Arey,
Hmm.
VC funding, I watched Silicon Valley, I watched some show, and chalo hum banate hain." Though that
Right.
generation is also there. Well, within that also, there are smarter kids coming out of tier 2, tier 3 cities who are very clear
Hmm.
कि इस रीजन में ये प्रॉब्लम है, ये बढ़ सकता है, इतना टेक्नोलॉजी में बनाऊंगा, ये रेगुलेशंस चल रहे हैं, मेरा चैलेंज ये हो सकता है. And with that, these are kids coming out, 20, 23-year-old kids, right?
Wow.
So that is good to see.
Impressive.
So
Yeah.
so the number of founders which are becoming fundable, from my perspective, is only increasing.
That's a really good thing to hear, given the fact that there's so many negative media around startup funding in nowadays. At least in last couple of weeks, the funding come हो रहा है, ठंडा पड़ रहा है, and all of that again. So I think this is actually a good thing to hear.
Yeah, so
What are your what are your thoughts on?
I have a different perspective on the
Go on,
funding
go on.
scenario. I don't believe that there's a funding winter per se. It depends on the stage.
Hmm.
From seed to pre-series A, I think it's a great time. From series A to series C, yes, there could be a crunch, and the crunch is not because it's a funding winter. It's because are for the first time reached a point where the number of companies in that stage has increased, and
True.
all of them have reached that stage for the first time collectively and figuring out scalability. So for the first time, investors are also evaluating so many opportunities together
Hmm.
and seeing which one will scale and not scale. So it's a function of time, it's a function of maturity.
Makes
Everybody
sense.
has the capital to deploy. I think it will happen with time.
Makes sense. I think thanks for putting that into perspective, because that essentially kind of had me a bit worried ki what exactly is going on. But I think what you said really makes sense. Early stage and series seed to series A wouldn't shouldn't be that much of a challenge. But since so many startups that got funded in the last couple of years are now graduating to the next stage of the point of scalability is essentially where it's a new horizon per se for all most of them. So it becomes
Correct.
difficult to evaluate all those opportunities and figure out कि कौन सा चलेगा कौन सा नहीं चलेगा किसका scalability होगा and all of that. Makes sense. This brings essentially the first part of the VC Unfiltered to a close, and we'll move on to the segment wherein we answer questions that were shared with us by the founders. These questions were essentially arrived by us conducting a small survey within a group of a community of founders that we have, and a lot of these founders had questions that they would want to ask a VC, but for some reason they were not able to directly ask it to them. So I think I have shortlisted around 6 questions for you. We'll quickly go through them and would love to hear your answers. Just a heads up, some of these questions could be really silly, and some of these questions could be really interesting. So let's start with that. So the first question is, since Indian VCs have a lower risk appetite, that's the assumption of the founder here, more founders are approaching global VCs. Is it wise to approach them without having domestic VC in their cap table, or should they directly be approaching global VCs?
So then, that's a very interesting question. And my response to that is, I don't think Indian VCs have a lower risk appetite. VCs are VCs.
Hmm.
And I think the kind of investments which have happened over the last decade and over the last 5 years and over the last 1.5 years also is a clear indication of how much risk appetite Indians have by the sheer number of funds which are available in India to be deployed, from micro VCs
True.
to seed, micro VC, pre-series A, Series B, right? So
Hmm.
I think that's fundamentally flawed that Indians have a lower risk, or other Indian investors. That doesn't echo with the
Makes
dry
sense.
powder which is there in the market. Second point is that
True.
because there are so many funds in India, right?
Hmm.
Um, the international investors are also coming in because of the opportunities. Now, if you're not able to raise in India, then there's
Uh-huh.
unlikelihood that you'll end up raising from global VCs. That's not the challenge. The challenge is
Right.
that if collectively so many VCs who are here and they're not able to back you, you need to step back and see where the issue is in terms of VC model. Try
True.
and get a feedback from 2 3 VCs saying that I don't need your money.
Hmm.
Just give me a feedback, right? I think I'm building a business in the
Right.
right way. Maybe I'm not, and I want to understand. Yes, my growth rate is slowly increasing. You want me to work towards doubling it, tripling it. Get those
Hmm.
indicators. Try and understand why it's not getting funded. Now, particularly fintech
True.
could be around regulations if it's not around your metrics per se, right? And regulatory is something which the founders need to address, right? No investor will come on board with a huge regulatory loophole. Obviously not, right? Each founder has to comply with
True.
regulations, whether it's fintech, SaaS, or whichever domain,
Of course.
right? But so having an international VC approach, it doesn't solve uh, my mind. You'll waste your energy. I think pulling back and understand there's so many investors. There's fintech investors, D2C
Hmm.
investors. Everybody's hungry for companies in India. There have never been so many funds in
True.
India, right? And everybody has the capital to deploy.
Right.
So all you need to do is figure out how are you building a solution for India or global, which can then figure out, can raise that first check, second check. Global VC approach
Definitely.
will happen when you cross a Series A round, right? And even
Hmm.
there, India has lot
Makes
many
sense.
investors. But if you're anything below Series A, work with Indian VCs. There's another advantage because Indian VCs have Indian networks, right? You're building in
True.
fintech.
Right.
Indian VCs will have access to PFSI, banking institutions, right? You're an
Exactly.
Indian founder building a fintech solution. I'm assuming you're building for India, right? So India में बैठ के काम करना
Right.
पड़ेगा, right? So I'm not saying global
Bilkul.
VC will not have that vantage point, but इंडिया में रह के ऑन द रोड जो एग्जीक्यूशन चाहिए होता है 0 to 1 जर्नी में, वो आपका पार्टनर डोमेस्टिक वीसी हो, यू विल बी एबल टू क्रिएट दैट वैल्यू. फिर जब धीरे
True.
बड़ा होगा ग्लोबल के लिए, you want to tie with the Barclays or whatever. I'm just throwing out, just giving you
Hmm.
a
Hmm, hmm.
open example. That is when you should kind of reach out to global VCs. We work very closely with a London-based fintech fund, which is evaluating some of our Series A companies. We do not, and
Makes
they
sense.
said, can you show us your pre-Series A company? We said, don't look at them now, don't because let
Hmm.
them build out. We'll come back to you after a year's time when they've raised some round as a function of their performance in India. This means they've
Right.
created a stickiness of the platform. So,
Hmm.
क्योंकि global VCs have other mandates. They're looking at Europe, they're looking at US, they're looking at India. साल में 10 डील करेंगे तो एक इंडिया करेंगे. यहाँ इंडिया में कितने
Right.
फंड है जो साल में 10 डील कर रहे हैं, 50 डील कर रहे हैं, इंडिया ही कर रहे हैं. Right? So
True.
you need to focus on that. Is my recommendation to founders.
Perfect. No, I think that makes absolute sense. And as you said, right, the biggest advantage of working with an Indian VC in this case is essentially the network that they have, the BFSI network, and the kind of others partnerships that they can kind of enable. That is something that a global VC might not be able to give you that easily. So in early stages, as you rightly said, I think it makes sense for these founders to kind of have essentially the early stage, have the Indian VCs in the portfolio. Having said that, I think we also have one really interesting question that kind of talks about how to create FOMO. I mean, one is there are two parts essentially. One is do VCs get affected by FOMO of a specific trend in any domain? And if yes, how do you essentially create that?
Sure. So good question, and a bad question, and good question because getting to understand what can excite a VC is important to understand. Uh,
Hmm.
Getting that done through fear is a two-edged kind of a sword, right? How do you deal with that?
True.
In my view, the only way to do that
Hmm.
is not. It cannot be. Oh, I have one investor, and if you don't join, you'll miss out. Time is of essence and all of that. That means nothing. The
Right.
only way to get an investor interested, or if they reach a state of FOMO, fear of missing out, is
Hmm.
only and only when you have achieved your product market fit and there's significant stickiness which is being created, right?
True.
And you go to a VC and talk about the numbers, you talk about the performance, you talk about the market penetration you've been able to achieve. If those things don't
Right.
excite the investor, if those things don't scare the investor, अरे यार मैं miss कर जाऊंगा अगर then that investor is not probably right for you. You understanding?
True.
So the only way to get these guys, investors, to come on board is to show your roadmap of achieving that product market fit, right?
Hmm.
This is creating stickiness. There is a utility. It's not the trends will not. I can keep saying इंश्योरेंस टेक बड़ा है, वेल्थ टेक बड़ा है, और वेल्थ टेक इंश्योरेंस टेक में
True.
आपने क्या किया और उसके अंदर कितना कैप्चर करा और कितना रिपीट, कितना स्टिकीनेस आ रहा है, जब वो आएगा, that is when the investor gets in it. And if they're not still, then they're missing out on the opportunity.
Exactly. I think that sums it up really well. Let's move to the next question. I think this essentially talks about what exactly are the key metrics as a VC that you would want to look at in a pitch.
I think in a
Sorry,
pitch,
I bet. What are the key metrics from a founder that you'd want to look at in a pitch?
no, I think in a pitch, what is most important is having your your team stride and your complementary skill sets highlighted very clearly. Uh, your detailed competition analysis. Where are you fitting in with other players? Sometimes investors look at a lot of information, but the kind of information which founders are able to provide on where they fit in. How I might say, "Arey, aap to Razor Pay ki tarah ho." And you're like, "No, boss, I'm not Razor Pay. You've gotten me confused. I am here,
Right.
and लगता है इधर होगा, लेकिन ये वाला piece हम लोग solve करें." No. So competition slide is one of
Mm-hmm.
the most effective slides, which founders fail to kind of take a deeper dive into. Um,
True.
Market size is it can go on and on, but I think a function of market and business model is where you'll get a sense of how big the opportunity can become. So emphasizing
Makes
on
sense.
that is very, very important. And uh, and your GTM strategy for the next six
Mm-hmm.
months, I think is critical on what you'll achieve month on month
Right.
for the next 6 months. नहीं 5 साल नहीं, 2 साल नहीं, बहुत projections बनाए थे लोगों ने कोविड से पहले. You couldn't anticipate, right?
बराबर.
But how you can do 30 days, 60 days, 70 day, 90 day वाला mindset, क्योंकि उसमें you're forced to think on a day to day basis. और बड़ा बड़ा projection और बड़ा
True.
बड़ा वो, so those things I think are very, very important to cover in a slide.
Makes sense. Perfect. I think that's really helpful. Actually, even I have observed that a lot of founders miss out on adding that specific competition on a slide. Ki who exactly are we competing with, and where do we fit in that landscape? Because sometimes what happens is due to the existing market bias, or sorry, the recollection of a particular brand in that domain. When someone says, for example, payment, the first thing that might come into your mind is Razor Pay. But then that it's the onus of the founder to kind of say कि नहीं हम वहाँ पे नहीं बैठ रहे. We are essentially solving for this piece, which essentially even they are not solving for, as you rightly said. So that
Correct.
that makes a lot of sense. Uh, this brings us to, I think, our second last question of the day. Uh, in fintech, what would be one or two areas that you would bet on now, which you feel that essentially will expand or will grow very rapidly over the next few years?
I mean, there are a lot of these emerging subsectors which are coming up. I have been there for quite some
Hmm.
time in fintech. Whether it's business payment solutions, digital wallets, online business payments, retail internet banking, you know, open banking solutions, whether it's B2B remittance solutions, uh, transaction
Hmm.
monitoring solutions, KYC software solutions. You know,
Right.
all those domains are important. Uh, Wealth tech and insurance tech still remain very, very interesting in my view. You've got lending,
Hmm.
which is, I think, uh, uh, is still undertapped in my view for
True.
various reasons. And
Hmm.
I think we will see a lot of these come up and get enhanced because of the cross-border linkage payment systems which we have developed, right? RuPay, UPI, right? With the India stack, the APIs being given by the government, business, startups, all coming together, right? The digital infrastructure layer has become very, very
Uh-huh.
powerful, right? So banking infrastructure softwares have a great foray right now. So I think we're moving into the second phase of fintech, um, which
Hmm.
which will see the rise of all these, and we've invested in
True.
all these domains. We've invested in the wealth tech space, we've invested in the lending space, we've invested in the banking infrastructure space, helping working capital needs for SMEs in various domains. And
Right.
all of these, because of the heavy digitization which has happened in India, I think is pushing us
Uh-huh.
to the next level. So everything is open in fintech, I believe. Everything still remains very exciting, and we, as an early stage seed fund, continue to evaluate all these domains.
Perfect. Makes sense. This brings us to the final question, and I think this is something that polarizes a lot of VCs that I've spoken with till now. Uh, in context of fintech, B2B versus B2C, where do you stand?
So, I mean, uh, we are a sector agnostic fund, right? And we believe
Right,
that the opportunity has to be big. Now, India is a 1.4 billion uh, populated country, which is very well
right,
digitally connected with cheapest data available, right? So clearly, and with the with the advent of UPI and multiple advancements in the fintech and BFSI domain per se, with the help of government, uh, it is a great time to get access to these kind of customers, right? So B2C cannot be ignored, right?
hmm,
And B2B, for obvious reasons, still remains a great opportunity, right? So I'll give you a few examples where we've invested in a company called 50fin, which is a credit platform that provides loan against securities and mutual funds for just 1% per month, right?
right,
And it works with large entities like the Muthoot Group and so on and so forth, right? Um,
hmm,
it basically helping them monetize their assets, enabling uh, to directly import their portfolios, right, and create an underwriting process within this app. Multiple use
true,
cases, right? I did not go ahead and invest in this company
hmm,
purely from a B2C or B2B. It's a great opportunity purely considering the digital connectivity of the country, and
hmm,
the sheer opportunity. The second is, we've invested in a company called Alpine Labs, which is actually the go-to fiat on ramp player in India. After integrating
hmm,
their APIs, the user can seamlessly go from INR to crypto. And crypto obviously has received some flack, but just the inherent technology over here developed by these IIT kids
right,
is fascinating. And again, this can be
hmm,
utilized both B2C and B2B, right? Bias book, which is simplifying credit for money lenders, prevalent in tier 2, 3,
right,
and rural India, is again, B2C
hmm,
and B2B SME kind of a space. And then bunch of these
right,
skills, right? Like Rupaya is there, which is a fintech specified user status received by the RBI, given by the RBI, and they're the
right,
first cloud-based platform for lenders, providing
hmm,
analytic solution. Um, and
right,
bunch of these. So I think there is no hard B2B or B2C. I think those lines are still open. India is a huge opportunity. B2B will be always present and big, and B2C will always be present and big, right? And as a VC, I will not put a cap on saying that ये वाला इसके अंदर नहीं जा सकते. No, I think it's just an open opportunity for India right now.
makes sense. Makes sense. I think no, that's really a fresh perspective, given the fact that I have seen so many VCs in the past kind of writing off B2C due to increasing CAC and specifically in fintech unable to the reduced ability to kind of derive additional revenue lines out of uh, the CAC that you essentially have spent in acquiring the customers. The break even gets delayed or pushed back in 2 years, if not months. But I think what you said, what really resonates, is the fact that given the fact that there is such a huge population out there which is very well digitally connected, if you tailor something to it and you put it across in maybe even in a niche format, like you said, specifically if you go B2C in MSME space or if you go B2C in a specific kind of spaces rather than a large B2C, that would actually make for a lot more sense. That would actually make a lot more sense from a GTM perspective for those kind of founders.
And see, you also
So I
need to
think, yeah,
understand
great. Mhm.
CAC will in some cases be high, but look at the CAC which
Right.
Paytm must have uh, given to achieve the first set of customers. I don't think so. Those
True.
barriers are there anymore. That first level of barrier has been accomplished and
True.
crossed. Every
True.
customer is in some reaching to a customer digitally is a lot more easier, and the cost is reduced thanks to the
Definitely.
connectivity, right? So one just needs to wear the hat of a growth hacker, and
Hmm.
there are ways you can achieve that. And I've seen founders do that. I've seen founders achieve that. And yes,
Makes sense.
customers are not always loyal, but Indian customers,
Hmm.
if they like something, the stickiness factor is so high that they not only they use it, they talk about it and they repost
True.
it, and therein kicks
Right.
in the virality factor, right? So all these things are positives
Exactly.
in my mind.
Makes sense. Makes sense. Perfect. Uh, I think that's about it for today. Thank you so much, Shashank. It has been a really, really, really interesting conversation with you. Got to learn a lot about the VC world as well as about fresh new perspectives in fintech. Thank you so much for joining us today, Shashank.
Thank you, Shreyas, and looking forward to meeting you again.
Likewise.